Alright guys, welcome back to the next trade that we have right here. It's going to be on Solana or XRP. Right now I'm looking at these two. I actually think XRP makes for a good short right here just because I really don't want to short XRP. So if you don't know, XRP basically just legitimized crypto. So XRP is declared not a security. So it did 100% move in about a day. Insane move up. And of course, you're going to have some pullback because things just can't go up forever. And I'm sure there are lots of people that are wanting to take profit right here. We might see some consolidation down here. And I do think that an XRP long is the way to go. All the shorts should be very short term. I'm not looking for a return to the bottom by any means. I'm not even looking for a return down here, to be honest. I'm looking for maybe something to get front ran right here. So this is like the obvious spot. We're looking at 60 something, right? 64, 63, whatever. This is the obvious area where people would want to buy. But given that the market is so strong, I do think that people will want to step in and get along around 66. And I'm looking for a short around the point of breakdown. So not here, but actually the point of breakdown right here. So that's about 79 to 80 cents. So I'm gonna go ahead. I'm not gonna put too many bids or asks. I'm gonna go ahead and start with the starter position, right? So I'm only gonna do 150K. Nothing too crazy, just something small. And yes, we're getting right into it right away. All right, so that's 200, 325, 425, 525. So 525K on top of this, so that's about 675 on a full position. My stop loss is right about up here. So something like this would be nice, right? So that's what I'm hoping for. If you notice, the asks keep getting bigger as prices go up. Essentially, as prices approach your invalidation, you actually have a better risk to reward, right? Like you're closer to the brink of invalidation, and that inherently, well, I shouldn't say makes it a better trade, but it makes it a potentially better return, right? Because you're much closer to where you would be stopped out. So you're able to, one, capitalize on a larger percentage move if it does move in the opposite direction to your target. And two, because your invalidation is closer, you're able to either, one, reduce the risk, or you can size up like what I'm doing to maintain the same risk profile. Okay, so that's generally the idea why you typically want to size up where you're closest to being wrong. And most people do the opposite. They enter so much early and then they sit in agonizing pain underwater. And as prices approach an area where, wow, this is a golden opportunity to short, right? Because if you're wrong, okay, well, the long is right there, right? Like if prices jump up here, guess what? 82, I'm wrong? Cool. Well, it looks like it's a long trade back up to the highs. That's the general thought process. So we'll see if I get it. Maybe I just lose money and you guys can watch me lose some money. But yeah, that's it. I'll tune in about a couple hours, see where price is at, see if I'm wrong or not, and then we'll move forward. But before we do, please hit the like button, subscribe. I really do appreciate it. And if you guys do like this kind of content, I do stream twice a week inside the Haven, and I will be streaming live on Twitch starting in August. So if you haven't already, you can follow my Twitch in advance. There's probably not gonna be a stream until August, so no rush on that. But again, thank you guys for always supporting. I really do appreciate you guys. I know that part of having a larger following means that I probably am subject to a lot of abuse and a lot of people telling me I'm a fucking idiot, especially when it comes to trading, right? Because people are so opinionated and there's so much money on the line and emotions and whatnot. But I do appreciate you guys for always supporting me. And yeah, we'll get back to the material right now. All right, so we are back sooner than I thought. So I'm gonna go ahead and clear all the drawings so that you can see what happened. Prices came up to this 82 area, gave us our fill, and then came back down here. Now I'm gonna go ahead and close out of this position. Why? Because it has reclaimed the point of breakdown, right? So the point of breakdown is a major area that I don't want. So I'm gonna go ahead and close this out. Give me 1 second. Let's do, okay. Yeah, so now we're out of this position, made about probably 5.5, 6K, whatever. Nothing that's too exciting, but the reason why we got out of this trade is just that was the point of breakdown, right? So level right right here. If you look at the point of breakdown, it's right here. So the fact that we reclaimed it, I'm not gonna target these lows. So maybe it bounces from here, maybe I get in the long, but it is getting late, so I'm gonna call it a night right here. Could this keep going down? Yes, but this makes me worried about keeping the position overnight, right? So I'm gonna go ahead and close that out, or well, I already have. Prices could keep going down, don't really care. Once you're out of a trade, you're out of the trade, right? The only thing that you should be focused on once you close a trade is the next trade. The only thing that matters is the next trade. Yes, you can review the past trades. Yes, you can analyze why something went wrong, why something went right, what you could have done better. But at the end of the day, the only thing that matters is that next trade. Are you going to use what you learned from the past trade to make a better trade in the future? Are you going to use better information next time? Are you going to execute better? Are you going to look for a better asset? Whatever. Only thing that matters is the next trade. And that's something that I always preach to people who ask me if, hey, is there going to be another trade? Are there going to be more opportunities? Yes, there's always another trade. So the only thing that matters is your next trade. And I am definitely coping because it is falling and I could have made some more money, but it is what it is. I will catch you guys on the next trade. Thank you guys for watching. Peace. Alright, so quick post-mortem on that last trade. We were shorting the retest of the point of breakdown, so this area right here, and we said we could expect prices to go as high as up here, right around this 82 area. Unfortunately, it was actually such a strong move that this candle spooked me out a little bit, and we got a retest of the point of breakdown from the top side. So what that means to me is that prices have reclaimed the area that it broke down. So this looks more like a deviation now, right? So if I were to give you a clean chart, and these are not straight lines because I just can't fucking draw, but this looks more like a deviation now, right? And a reclaim of this could possibly send its way up to the highs. I hope you guys understand why I close out of this position. And second, what's nice is because we planned for prices to come up this high, we were able to fill our positions around that 80, 81, 82 area, which even though we were wrong, we still got to exit this position with a little bit of money. That's how you ideally want to at least set yourself up, right? So that even when you're wrong, the chips are stacked in your favor. And that's something that a lot of newer traders don't think about, right? They just think about, okay, I'm gonna get into a position, but how you get in a position matters as well, right? Like how you do something definitely matters. Just some food for thought, and I'll catch you guys on the next video. Peace.